JB here. Monday, June 2nd, 3:32. It's Friday afternoon. Talk really quick about the market. Some names I'm looking at go from there. S&P in the green, up nearly 0.5%. Interesting session, right? Interesting session to start the week on the heels of what the best May in 35 years. Um, yeah, market started weak. A lot of back and forth over the weekend. So thought maybe there's more concerns. If you read the headlines, oh, U.S.-China trade war tensions are heating up, and then its markets are higher. I so I think a lot of it's kind of like I wouldn't say it's baked in per se, but you had to think. And I was mentioning last week, like the key to everything with U.S. and China now is this conversation Trump and President Xi. I think once that happens, and there's like kind of like okay, let's go. Then I think that kind of puts that out of the way. So I don't know if we'll get a big spike when it happens, and I mean I'm optimistic, so I think there'll be a positive outcome, or at least a positive on both sides, and then some of these other deals. So, news out again today that supposedly the deals have to be set by Wednesday, right? Good faith effort deals. So you'd have to think, it's got to be Vietnam, Southeast Asia. That has to come. The EU, you think that has to come pretty soon, and then we can kind of push that out of the way. And it's comical. I mean, it's like I hate to say comical, right? It's like when you trade in options, it's a risky, right? That's inherent. That's the reason why you have these instruments are there because you're rewarded for holding the risk. And when you trade stocks, there's risk, right? So it seems like everybody just wants to point out all the risks. There's always risks. There's always risks of recession, unemployment, the economy, a company not doing well, all those things, right? So it's crazy, like the peak fear back in April. And I'm not saying that there might not be a recession coming at some point, but that's been out there for what 2022 was happening as well, and we did have the back-to-back negative GDP numbers. But here it is, the Atlanta Fed GDP now is up to I think it's 4.8% now, 4.6%, somewhere in there. So wow, just remarkable stuff. So that was the update came out today. There's another update coming out June 5th, and they're not exact. Like they weren't exact last time. They forecasted negative like 2.8%. GDP was negative what 0.2% after the last revision. But that's why it's always important to kind of like you just got to keep things even keel, because if you get sucked into the bear side, I mean you're usually you're stuck for a while. So even if you do make money on the initial downside, your thought process is saying, hey, this is just it. 480 on the SPY, that's just the start. And a lot of these folks were preaching that and thinking that there was a heck of a lot more downside coming. And good thing things got a little bit resolved with U.S. China and some of these other, the tariff pause and all that stuff. Because otherwise, yeah, that was a slippery slope we were headed on. But if you just sat there and got to put your, just not would not be fun, right? So all right, that's kind of the overall market. You had Fed Chair Powell came on at 1 o'clock. He just did prepare remarks, didn't talk about anything, right? Nothing market moving. So that was kind of like a non-event. And now we'll start getting data this week. Jolts tomorrow. There's manufacturing services PMI, and then the big uh, jobs report on Friday, right? And, again, another one of these things, and you see them. I don't know if this is from Market Watch, but implied job losses, right? And who remember? There's so many things over this year so far that you just start. The Doge cuts, right, in the government, and the craziness, and the job, the housing prices that just tanked in Washington because all these job cuts, people had to leave, couldn't afford homes, or whatever. Maybe they got jobs elsewhere. But you got to think like the whole. If you think about the whole picture with someone losing a job, it doesn't just hurt that person losing a job. It doesn't then the money that was paid into insurers, the money that they used to spend at the restaurant, the money that they went to the grocery store, the money that they got furnished. So all that comes out of that ecosystem. But maybe they get a job somewhere else, right? So a lot of the times you see these people talking about how all these jobs cuts are going to devastate the economy, but then that implies that these people don't find another job, right? And not only that, a lot of the people that lost their jobs are getting severance packages that last 9 to 12 months. So you would think most folks who get a job within that time frame, right? So it's like like I was talking about this morning with the Redfin data in regards to house sales, right? The dollar amount of house on sale is up 20% year over year, and the most on record. And I'm like, isn't that a function of stock price of the house prices going up, right? It's the same kind of thing where back in the day, and people bring this up all the time, that they would talk about leverage. Oh, leverage is that the amount of margin dollars on record is at the highest on record. I'm like, wait a second. Well, I mean, if the market goes up in price, just as a function of that, the leverage is going to go up in price, right? You're holding more. If you're on margin on some of your stuff, the margin amount's going to go up as your stocks go up, right? I would just call me stupid. So And I'm not trying to dismiss all this stuff, but here we are at 592 on the SPY. Again, this morning you could have thought, hey, here's an opportunity for the Bears to come in. Got right down, right again, 10 o'clock, right around 585, 586. That seems like key spot here for now. So if we do get some shenanigans, we watching that. Otherwise, I think 597 is the next spot here. So that's kind of overall market. So individual names, I was watching Lemonade on Friday, and I almost pulled the trigger on those 40s and the June 40s. I don't even know if I talked about it on Rant. I probably did. And then I passed. And then I was watching it this morning, and you see some of these insurers going, and Root's another name that seems to run in sympathy with Lemonade. Of course, Trupanion, one of my favorite names. I was gapping this morning. I'm like, so then, of course, it's 33 and change in the morning, and then it just starts to take off. And I'm like, here it is, huge short interest. And if you look at Lemonade, I think Lemonade's $100 stock in the coming years, in the coming months, or maybe 6 to 12 months, if not higher. I think it's like one of the more misunderstood stories, right? So that's the premise. A lot of times when you see me trading calls on Lemonade, it's not for the meme, for the folks who are in it for the short squeeze or what have you. It's because I think it's misunderstood. And that's a lot of reason why there's a 30% short interest. And not only that, it's paid handsomely on calls when it's had some moves, right? And I mean, I don't know how many 1,000% I made on the calls one time, and then there's times I've traded it hasn't panned out, but the times it has have more than offset the times it hasn't panned out. So here's another scenario. I was actually looking at the 40s this morning. They were like 60 cents, 65, but the spread was like 50 cents by 80. So I passed, blinked my eyes, and boom, it takes off. And those calls were 130, 140, 150. So they were already up a couple 100%. So I passed on those. And again, the thought process here too is that if it does run, it's not going to matter if you're into 40 calls at a 45. They're all going to be serious multi-baggers. So got some time on the June strikes. Went a little further out, a little higher up, and I'll just continue to hold those. And then we'll watch tomorrow here. It's a tight Bollinger Band setup, so it's above its upper Bollinger Band of 34.64. So it's going to need a lot of volume to break out, but if it does, I think it heads over $40. And then you start looking at some areas of resistance that once it gets over $40, and if it continues to break through, I could see a squeeze 2.0. So that's the thought process there on Lemonade. So I'll continue to hold those. That was the one trade here today. Again, longer term chart. You can see the move in November. And of course, in November, I had, I don't know if I had the 25 calls and I had the 40s. And it was a very profitable trade. All right. So that's Lemonade. Then just some other names here. GameStop, 130 or so, it started to break out. I'll take a close over $30. Once it gets over 32, I'm going to add some more strikes here on GameStop. I'm not going to keep reiterating the same thing I've been talking about, where I think it's headed back similar to the other setup from its post earnings, and that move from 20 all the way back up into 35 handle. I think it heads, if it holds 30 here, I think it's headed 45 plus in the coming weeks. W is back over 40. Well, it was 42 about 15 minutes ago, hanging right at that 200-day moving average, 42.25. My June strikes are slightly in the red here. I'll continue to hold those. If it gets over that 200-day moving average, I might add some more calls because I think this is one of those names that, it's had a great move from the Liberation Day lows, and then it's kind of consolidated, had that nice move last week, and then I think if there's news out of Vietnam, I think it takes off to the next leg. And not only that, had that great earnings, right? And some of the reason I got the calls last week was because the big gap and move up to $40 on its earnings, and then it sold all the way back down to 35. I'm like, didn't make sense to me. So I think it trades much higher in the coming weeks. So I'll continue to hold that one. And then other names are earnings. MDB and DocuSign report after the close on Thursday. I mean, MDB, I was watching on Friday. I was looking to get possibly some calls for premium build earlier last week. And then even today you watch, and I'm like, oh, good thing I didn't get the calls because it dips at the open. Then it reverses, goes all the way up here to 192. And then the weekly strikes are still down 25%. So frustrating if you're trying to play that for premium build, because for me, I would get the weekly, like the 240, 245s. And then with this move here, I would hope I'd be able to get some premium so I can close them out to cover costs. And that hasn't been the case. So I might pass on MDB. Also, Universal Display, watching that one, spreads are so tough. I was looking at the 165s and 75 cents. I might look to get those. It only has monthly strikes, a little tougher to play. I think that's it, folks. Hopefully, if we get more tradable opportunities, I'm not going to sit here and just add positions just to add positions. Oh, Joby. I don't see any news on Joby here this today, all the way down to 735 at about 2 o'clock, and it's bounced. I think this trade's over $8. Once it does, I'll add more strikes there. VKTX, a similar story, down to 25.80 at 2 o'clock today. That one's bouncing. I'm just going to continue to hold the July, August, for the data at the end of July and August. Funny that what do you call it? The Blueprint Medicine. I forget what the ticker is that Sanofi acquired today. One of the, I was like last week, I was talking, hasn't been a big M&A in the biospace. And then finally, it's not a big M&A, but I mean, 8 billion, I guess, all things relative. But finally, you look at the biotech stocks and finally IBB's holding the gains here today. So, ah, another name I was watching too, Regeneron, after uh, its study uh, failed last week. And then I'm like, wow, this thing's way oversold. Started to bounce this morning. It has, I don't know if it's a GLP-1 kind of a drug that assists with GLP-1 drugs. That study came out this morning. So at some point, I might get some Regeneron. And that's it. I feel like I'm losing my voice for some reason. Oh, the other thing with today, take a look. Yields are up and the dollar's down and the market's soaring. So VIX is kind of flat. Just an interesting session here today. But I'll take this green close. And yeah, that's it, folks. Let's have a great day. I'll be back rock and roll.